And after consulting the charts, as she is known to do, Katie Stockton says the damage is not done yet. Katie, in fact, you say, what about Apple?
You know, it does seem like it's more than just a short-term shift. We think it's an intermediate-term shift. We see it in the indicators. The weekly MACD, for one, has flipped to a sell signal. And that is something that should interrupt the uptrend for more than just a couple of weeks. We've already seen this peak lead to a decline of more than 11% from the recent high early December for Apple. That means that we've seen the 50-day moving average taken out and now also our trusty cloud-based support level. The next support that we see on Apple's chart is around 243, 6 to 7% below current levels. And we think it's a momentum shift that bears watching. The good news is that the long-term trend is still very much intact, and our long-term metrics, monthly indicators, if you will, are still generally positive.
So there is a sell signal. So you're saying to sell Apple. Does that include shorting Apple?
Who you are.
Okay.
We actually don't advocate selling stocks or shorting stocks, I should say, that are not too far off their highs. We feel like long-term uptrends are a little dicier to sell short. That said, we actually did put out a short recommendation recently on Palantir that got a little controversial, I think. But we feel that we are going to see this correction deepen for Apple. And at a very minimum, somebody who's willing to or looking to add exposure should probably wait for some support discovery lower.
Right. What do you think of this?
It makes sense. I mean, it's a long-term uptrend from March of 2020 was probably a $50 stock, and those points are pretty, I mean, we can draw the trend line. As Carter says, they draw themselves. And into earnings, the weakness is noteworthy, I think, and others are sort of taking the lead from Apple right now. I think a 243 level makes sense for a lot of reasons. I'll say this, and I think Katie would agree. You know, with passive investing and the amount of ETFs that Apple is in and the amount of funds, it's very hard for Apple to have a material move lower. But with that said, a 243 price target from here is significant, so I agree with her.
There are already questions about its valuation, questions about its AI product or lack thereof so far. There are also now questions about memory prices and what that will do to gross margins with the surge that we've seen in the memory stocks in the demand there, Steve.
Yeah, I mean, late to the dance in AI, I think, is a tailwind, not a headwind. I think they didn't waste money. Okay. There was a huge amount of CapEx that was probably wasted. If I look at the chart in Meta, that doesn't look very bullish to me. If I look at the chart in Microsoft, that doesn't look very bullish to me. If you put your hat on Google and NVIDIA, those are the best charts in the space. My problem is the install base. 2.35 billion. Maybe I missed, another million or so there, but 2.35 billion with a cloud, with recurring revenue, with a whole bunch of cash that can be, used. I would probably say maybe stay in the name and see how it reacts.
Because you are on this desk, I think, the guy who probably lets your trades be most informed by the charts.
Yeah.
Yeah, and you're saying, I don't care what the charts say right now.
Yeah, no, I agree with, Guy started off with saying you could see that in the chart. I agree with her analysis is spot on. But also, when you come out and you say, when you look at this chart, it broke that uptrend line. It's definitive that it broke it. But I think we're more on macro now. So 2/3 of all stocks trade with the overall market. So where does the market go? That's where Apple goes.
Well, it's really a question of, do you want to kind of deploy new money to chase a 5 or 6% pullback? So again, I'm not a chartist, but I understand them well enough. I understand Katie's thesis here. Clearly, you've taken out some significant. She mentioned 250-day moving average. She also mentioned MACD. I'm not sure where it is on the RSI, but so I understand. I think it's a very cogent argument. I guess my question is, if you have a defensive type of posturing, we've already seen a rotation kind of out of tech and into more cyclical names. If you are to see a reversal of that, I'm still not sure that people want to get too far away from this name. I think you've got, what is it, $100 billion in annual free cash flow or something like that. The valuation, I think, is the real pushback. Do you really want to be paying low 30s for a bond-like compounder? With that said, that services has gone, I believe, from 23 to approaching 29%. So that's really where the real margin story is. So to kind of hearken Carter, to me, it's more of a pair of twos than it is a bearish type of setup. I understand. I don't see a ton of upside absent in AI, but I think I'm a little bit more cautious on going in and saying, actually, this is a name that I would either look to get out of or look to establish a new short position in.